Hello everyone, in this video I'm going to be explaining what top-down analysis is and how to use it to your advantage. So guys, if you don't know me yet, I'm your guy FX, and if you haven't subscribed to this channel yet, kindly do well to hit the subscribe button below and turn on post notification to get notified whenever we release a new video. So before we jump into the video, let's start with the basic definition of what top-down analysis is. Top-down analysis is the method of analyzing the market by starting with the bigger picture, which is the higher time frame, and then breaking it down into smaller pieces, which is the lower time frames. This method is used by many traders because it allows them to make informed decisions based on multiple levels of analysis. Mind you, our analysis shouldn't be too much because too much analysis leads to paralysis. Remember, the goal of analysis is to help you make informed decisions, not to overwhelm you with a lot of data. Little analysis can go a long way. Now that we know what top-down analysis is, let's get started. So guys, I just want to explain a brief explanation on time frames for different type of traders. Scalpers are traders that just take advantage of small price movements. They can only make as much as 5 to 15 trades in a single day. So their main trend is the 1 hour. They use the 1 hour time frame as their main trend. They use the 15 minutes as their current trend, and then they use the 1 minute, and sometimes they use the 3 minutes for their entry, right? So day traders are traders who open and close all of their position within the same trading day. We don't hold position overnight. So, and we 2 to 3 trades in a day is very fine. So we use the 4 hour for our main time frame is the 4 hour. The 1 hour time frame is the current trend, and then we use the 15 minutes and sometimes I use the 5 minutes for my end. So as a swing traders are traders who hold position for a few days to a few weeks. To be a swing trader, you need a lot of patience, So as swing traders, they use the weekly as their main trend, and then the daily as their current trend, and then they use the 1 hour for their entry, right? They use the 1 hour for their entry. So let's get into the top-down analysis, and also I'm gonna be sharing with you how to use those time frames to your advantage, right? So guys, we are now at the 4 hour. So I just want to use a trade we took yesterday as an example. So we started from the 4 hour. This is what top-down analysis meant, but sometimes we go to as high as the weekly. We just do that once in a month or twice in a month to just see a broader view of what want to happen long term. So but day to day we just go to the 4 hour to do our top-down analysis. So as you can see, we are having an uptrend. So we are having an uptrend. We have like first touch, second touch, and a third touch. So for a day trader, the 4 hour is your main trend. So we are currently in an uptrend. So now let's go to the 1 hour time frame. So guys, this is the 1 hour time frame, and as you can see guys, we are having what we call a counter trend line, right? A counter trend line. This is what we call a counter trend line. This trend line right here, this is what we call a counter trend line. So guys, this is what we call a counter trend line. This trend line right here, a trend line in a trend line, right? This was the 4 hour. This was the 4 hour trend line, and now we are having another trend line. And the 1 hour, we are also in an uptrend, right? We're also in an uptrend. We have the first touch, second touch, and then this was third touch. So now we want to look for a good entry, and so looking for a good entry, we're going to go to the 15 minutes. Like I said, 15 minutes or 5 minutes. So now let's go to the 15 minutes. So guys, here we are at the 15 minutes time frame. As you can see, this is the trend line on the 1 hour. So now, we want to look for an entry. So this was where we took our entry. The 15. This is the 15 minutes. Remember, 15 minutes. What we use 15 minutes for is to get a more conservative entry. So we wait for chart pattern and candlestick formation. Do you understand? So here we saw this channel, this descending channel, and then we waited for a break and then retest, right? Waited for a break of this and then a retest. Let me go to the 5 minutes to make it more clear, right? So as you can see, guys, we waited for a retest right here at the break of this channel. We waited for a retest and then we bought, right? We were targeting this, but eventually price didn't get there, right? Price didn't get to our TP, but we set break even, and we've taken partial profit when price came here, right? So what I'm just trying to say is, this is how we use the time frames to our advantage. This is what is called top-down analysis, and this is, so the 15 minutes and 5 minutes is just for getting a good entry. So as you can see, guys, this was a very, very good entry. This was a good entry for this trade. This is what we call the top-down analysis and using time frames to your advantage, and it was corresponding to the main trend, which is the 4-hour, the current trend, which is what, the 1 hour, and the 15 minutes, right? 3 time frame were telling us to buy, and then we bought, right? So, and sometimes we can just have like a W pattern, candlestick, multiple week rejection, something like that, which is just going to give us a more conservative entry, right? Which will also increase your win rate. And so therefore, I hope you loved the video, and also this video is for educational purposes only and is not intended to provide any sort of financial advice. You can also support this channel by subscribing and sharing this to as many people you know might also be in need of this video. Much love, signing out.